can sign up directly with the link or speak to a support rep if you have any questions. If you're asking, what do I trade? Pretty much everything. Indexes, ETFs, stocks, options, futures, Forex, and crypto. Thoughtful analysis, active trading. Check it out. And now, back to the show. What's happening, everybody? Happy Friday. Welcome to the non-farm payroll bloodbath. S&P's down 1.6%. Q's down almost 2%. Dow is down 1.3%. Russell down over 2%. Mag 7 is down. Volatility is up. Dollar slightly stronger. US 10 yield slightly stronger. Oil up to $76. Oh boy. Oh boy. So a couple things to take in for today. Here's a recap of the non-farm numbers. Came in 256 over forecast of 164, but the revision was negative from 227 down to 212. A lesser, so 4.2 came in 4.1 with the unemployment rate. Average hourly earnings came in 0.3. CAD numbers came in pretty positive. Let me take a look at the currency market here in just a moment. But the big thing that I'm watching is this 10 a.m. news for the consumer sentiment, lesser, and the inflation expectations higher by quite a bit, actually. So here is where I think the market is thinking about stuff. Right there. So the 1-year inflation expectations just went from a 2.8 print from the previous to 3.3. And the 5-year inflation expectation went from a 3% to a 3.3, both higher. Next week, we have CPI and we have PPI. Again, we'll see what the true data is. I think James was talking about the probabilities of rate hikes. I don't see it on the watch tool at all, but if we go to probabilities, what the market is looking at, and this was weird. I was in a session earlier this morning. The June FOMC rate decision was actually paused and not looking for a hike or a cut rather. So right now the probability is still, it's more of a coin flip. You can see here that if you go to June, so I'm looking at this number right here. So June, we have a 42.7% chance that there's going to be a 25 basis points cut, and we have a 41.4% chance that there is no cut. So I think we could say that right now this is a coin flip. This is a 50-50 coin flip, and it's technically like 42 and 42. So it'll change as we get closer to it, but I think it is pretty safe to say that right now there will be no cut at all until, if at the earliest, probably June. And next week's data is going to be really important to see, and I don't know if they're going to fudge the numbers or not, but I don't think we have a forecast for next week. If we go to, I think Tuesday is PPI. Okay, so we do have forecast for PPI. I want to see what it looks like from the economic calendar on Bloomberg as well. So Tuesday, we go to next week. Let me get some comments here. Okay, David, I'm not with MTI, man. I'm not with MTI. I'm with Prosperity Pub and with A1 Trading and my own stuff. All right, let's go next week. If you'd like to, so if anybody wants to join, I've got a Telegram channel, I've got a Discord channel. If you want to, follow me, see what I'm doing, it's all right there. So let me share. I'll just do a one-day link for my Discord. Chris Pulver Trading invite. Let me do a one-day link here. So for 1 day, Chris Pulver Trading Discord. Nope, don't post that. All right, my bad. I didn't mean to post that. There. That is my Discord. So that is where in my channels, I've got free group chat, any assets, Forex, stocks, options, futures, anytime I go live on YouTube, a blog that I post typically every week or more, anything on Twitter, any analysis is interesting, private instruction, affiliate discounts like your Edge Finder, some software that I use that helps me trade, and real-time news, all that stuff. So I keep my channel pretty clean. I don't like a bunch of like sub-threads. I don't send friend requests. I don't send direct messages unless you direct message me first, but you can find me every day in the free group chat. Okay, so anyway, easy way to follow me. All right, let's go to next week. Let's go to next week. What are you doing there? There we go. I'll just go the whole week. There. Apply. All right, let's go to Tuesday. So Tuesday, 8:30, we have CPI year over year. Okay, okay, interesting. Is that right? CPI year over year previous print was 3.4. Yeah. Um, that's PPI. Okay. So is that right? Previous print was 3.4. They're forecasting 3.2. So an improvement, maybe. PPI year over year, 3%, 3%, month over month, 0.4 to 0.3. So the forecast, according to next week's Bloomberg economic calendar, is that there's going to be a slight improvement from the previous print in producer price index. We shall see. Wednesday is probably like the big headline that everyone's looking at. Here is there's CPI coming out of UK next week as well. And let's get into the 8:30 news for the US. And I don't have anything forecasted for CPI. So I've got month over month forecasted for a negative print. Year over year, there's no forecast. Core CPI, there's no forecast. CPI month over month, 0.3, 0.3. CPI year over year, this is going to be an important thing to watch. These two right here. Watch this and this. Okay, you can get this. You'll see this on the Edge Finder next week as well. But is the inflation news looking better? We don't know. We're going to find out next week. Okay. So for today's price action, we're right back into the tests of the levels that I said you got to watch for it, right? If we have support and resistance zones, we have support from PCE. This was the FOMC low right here. 2 days later, we had that gap lower that started the holiday rally. So we have the PCE low right here. We had the retest of that during the holidays. Today, we're retesting that through non-farm. Now, we did gap lower. We've already had like a 100-point day on the S&P. That's a pretty decent amount, right? S&P's down 83 points. We had like a high to low so far. Here's my SPX. This black line is that support line that I was talking about. I don't think that we come back and fill today's gap. I think that's a long shot. There's like a 20% chance we fill today's gap. So that's like unlikely to happen. But I would say that from this close yesterday to open today and that flush down, getting a pullback here and settling in, like closing above 5,800 would be, the market just kind of defending a support zone, right? Testing, but we're coming right back down to the daily 100 moving average. So if we're testing and there's a little bit of buying there, or the market's not quite ready to see that the damage is being done yet fully. I mean, if today's candle were to close not only below the PCE low, but below the holiday low and also below this 100, well, then I would be looking at this as just path of least resistance is now to the downside. Unless there was like a big snapback candle, getting some additional trades to close out. Okay, I'd set a trade close out for profit. Let me find that, track that. That was another trade on the SPY that closed out today. What one just closed out? So 550 and 555. Okay, so that was $1.06. Got it. 615, 620. There it is. Got it. Okay, so that was $1.26 closed out for $1.06. Perfect. So that's a little winner chicken dinner. Okay, I'm gonna do a quick update. This is a service that I have. This is now 7 for 7 in the last 2 weeks. Not too bad. Seven for 7. And let me just do a quick update here. That was a SPY trade update. SPY 214 expiration, 615 by 620. And the 555 by 550. That filled for $1.26. Profit target hit today. Good. Okay. Market's down. Portfolio's down. I've got hedges. I've got collars. We'll see where the dust settles. I do want to take a look and see what do I have for 0 DTE today. Today, I have some SPY trades. This should be, oh, I got a collar trade in here. Very nice. Okay, cool. So I've got one of my clients that has some SPY. I don't have any other 0 DTs in that account. That's good. Any 0 DTs in this account? Only a couple. So Apple, son of a biscuit. That's a losing trade. SPX, 0 DTs. These one of these could be closing out today for hopefully some profit. We'll see. SPY, that's out to 7 days. All right, so Apple, that's going to be a losing trade. No big deal. This one. So I want to have a look at this. So I have some shares right here. Have some shares, have a collar trade. This is why I'm using the collar trade. Let me double check. So I've got SPY. This is going to be some tracking. 111. Okay. Waterfall. Short term. All right. So I bought. Let's see here. NVIDIA. Sorry, I just got to find the tracker. I saw this question yesterday. Chris, how do you keep track of all these trades? Because I've got a crazy long spreadsheet that has like thousands of lines in it that I've got to just do a control F and search for it. But I'll find the trades. SPY. Waterfall and ownership. There we go. Okay, I got it. Here's the trade. So 599 was the assignment. So I did a 599 by 598 for 35 cents credit. I closed out for the contracts for a loss, which was about $260 on the loss, and I'm keeping 100 shares. The debit side, so I did a collar trade, added a collar trade for 45 cents credit. I did a 598 sell call by a 590 buy put. I want to see what that buy put cost me. So the put was 457, and it should be trading for, well, no, the put was 412, and it should be trading for like $8 or $9 today. I'm going to close this out. Let me see what this is trading for. So 412. Let me update this. This is the beautiful thing about tracking all your trades. With options, you got to track them manually. Unfortunately, I've yet to see a broker or a piece of software that tracks all of your debits and credits. So I make the old boring spreadsheets and do it that way. So the 590 put is 4.112 debit. And if I close it out today, which is today is the expiration, I can get $8 and let me see if I get $8.50 for it. So $8.50. See if I get $8.35 for it. How about $8.30? All right, I just closed it out for $8.30. Now, what this also means, I'm going to look to roll. So my 598 call is in pretty much full profit. Let me see. This one could probably close for like 1 cent. Yeah, that's perfect. So I'm going to close this down today. So close this out. Okay. So I've got a collar trade in. Let me do some math on that. All right. So 412 debit closed for 8.30. So that lowers my cost basis again. Update collar. So I gained an extra on the put side. I gained an extra. So 8.30 minus 4.12. I gained extra 418 on lowering my cost basis. So gained 4.18 on long put. So that brings my cost basis down 594.39. I own the SPY now at 590.21. Now I'm going to put in another collar trade. Okay, so I have the shares. I closed out my collar trade. I'm going to put in a new trade. Now I own the shares at 590. We're trading at 581, right? So I'm technically upside down a little bit on the SPY, but I'm going to protect the position. I'm going to go out another maybe 1 or 2 weeks and throw in another trade here. So if I go out to next Friday, my break even is 590.21. So I can get some profit on that. I'm probably going to go out a little bit farther. Let's go out to the end of the month and see if I could do. So for 590, I could repair this one for like $5 to $6. I'll go 590 here. I could go, deep in the money as well. All right, I'm trying to make. So here's the deal. I'm trying to make up for a $260 loss by repairing this stock. If we get up to, let's say, 589, and then I collar this thing. So if I get it called away at 589, I'm going to grab. So 590.21 minus 6.24. That brings me down to 583.97. I get it called away at 589. That gives me $5.03. So that would make up for my loss and give me net profit. I'd obviously like to go for a little bit more profit than that. Maybe I bump this up. So I'll bump up to 590. Now on the put side, I need to buy a put and hopefully not have it cost me an arm and a leg. So I'm looking at about $8 up on the call side. So if I did roughly $8 to $10 lower, so 82 to 72. So I can still make about 45 cents net profit, have it protected to the downside, have it called away, $8 higher if the market pushes up. I can also roll this one. If price snaps up to 590 or so, I can have that rolled. So let's see here. I get more premium there. Let me do the numbers. So I've got it at 590, grab a net credit, 590, get it called away. I need to go up here. So I'm going to go 590. Let's go a little bit lower. 570. That's about $12 lower on the put side and about $8 higher on the call side. Still get 80 cents of profit. All right, I'm going to do this trade. So 80 cents. See if that'll fill. 83 cents. All right, I know I'm walking through a bunch of this stuff, but here's how it works. So 590, added new collar. It's a 131 expiration. And my put side, so I did a 590 sell call and a 570 buy put. And I need to know the debit of the buy put because on the protection side, that was a buy put for $4.80. I'll double check the exact fill. Let me check the history real quick. So that put was $4.79. Okay, 4.79 debit. All right, so now that trade is in, and the collar should be January 31st, 570 and 590. That was filled for 83 cents, so I can lower my cost base a little bit more. So now, new break even, 590.21, 590.21 minus 83 cents, 589. All right, so 589.38. Okay, so 589.38. If it gets called away, fine. I will end up looking to roll that 590 as well. So I'm going to keep an eye on this one for the next couple of weeks, going out to the 31st. This is going to be out 21 days. I'd like to keep an eye on that one to possibly roll that 590 and just roll the collar a little bit. So I'll just keep like massaging that position. All right, that was just something I had to handle and take care of. Overall, like pretty big swing in P&L today. This was, like -17. Now it's -8. So it went from basically flat to $7,500. Um, MicroStrategy still looking to get this one called away at 305. This one's out to the first part of February. NVIDIA, let me change this back to symbols. I know that I have some shares of MicroStrategy, I have some shares of NVIDIA, Microsoft, some ratio spreads. NVIDIA, if it gets called away, let's see, I don't have any shares there, but I have shares elsewhere. How do I not have shares in NVIDIA here? Ratio spread, ratio spread. I think that was because it was in the middle of a transfer. NVIDIA. There we go. So there's the shares. The 130 by 140, we're trading at 136. That one's out a little bit farther. Anyway, let me get some questions. So far today, market's looking pretty good for defense, right around that market maker level that I talked about in one of my earlier sessions. 5,800, I thought we'd be defending. Is anybody surprised that these lows that we talked about all week, that the market is responding to them today? I'm not, especially after the market gapped lower. So this is SPX this morning. This is where we closed yesterday. We opened today. I was looking at this as a high probability of a no gap fill. Like based on the size of that gap, I didn't think we're going to fill it. I was looking at market maker levels down here to be defended, and that's exactly what's happening so far. So hopefully it stays that way. I have a trade in that looks like this. It's a broken wing butterfly. If price is greater than 57.95 today, then I will keep 75 cents a contract. If price is at 57.95, then I will make $5.75 per contract. That's my pin price. That's very hard to do, but so far this market is being cooperative off that support level that I talked about. So that red line is my support level. This line here that's dotted is my support level. If we're not doing any technical damage to it right now, then we're still in this range that the market is waiting to see. Like, okay, is it PPI next week? Is it CPI next week? Is this what's going to be like the big flush down? We still have Trump's inauguration on the 20th. Who knows? But trades are still closing out, working out pretty nicely. Yep. And the 10 years up. I get that, Kevin. That's a good point. I've been talking about it for the last couple of months. It is still going higher. It is a problem, right? So let's go top down here. S&P reducing a little bit of the down today, 1.2. Nasdaq was 1.9, almost 2%, now 1.3. Dow is down about 1.3 still. Russell was up to 2.5% or like 2.25%. Now it's 1.9. So the market's responding a little bit to an intraday bounce. Volatility is still up on the day, up a decent amount. But, is this like a big volatility event? No, this is just higher volatility. SVXY, not really that interested in buying this thing yet. I want to see if we get like a bigger dip in SVXY before I take some plays there. Dollar index still going higher, not a surprise. This is a surprise to me. That is a big, huge spike in oil today. Wow. So this, again, this does not make me think like I want to buy oil now. No, I don't. I really don't. This just shows that, okay, the pressure that the bulls were creating is now for real. Like they're exploding this thing to the upside. Unless this gets faded really hard, right? Unless this gets faded really hard with a candle that looks like a big fake out, right? If today's candle on oil closes like that, then I still think it's a potential fake out candle. But if it holds here, we have this little indecision and we squeeze through it, then I would now say that if oil is testing this high or clearing these highs, that a push up and any pullback is possibly offering a buy the dip. Okay, I'd still want to use a stop loss. I don't know. I probably won't trade oil, but if you're long it because this has been the early momentum, it's working out pretty nicely. But if you're long oil, I would have stop losses to break even or better, and I would just be trailing this thing. Like I think oil is going to be pretty jumpy. So it obviously like squeezed through these last 4 days of indecision. If it stays above the 200 moving average, then I think we are in a bit of an uptrend to see oil pull back and get into the maybe high 70s, maybe 80s. Who knows? Again, not looking good for inflation if that's the case. So NG, nice rip on natural gas. My big gap here, 5 to 23. I've got a $23 call on natural gas. It's obviously a bit higher, but that's an income play out to April. Gold, nice little move on gold, staying bid off that 100 moving average. I mean, I'm not gonna complain if oil or if gold is going back to highs again. I'm not going to complain. I still don't think we make this breakout to 3,000 or so. But I think we could get back to like 2720 or so. I think we can get back to that level. So in the near term, I could see gold getting back to like 2700, 2720. It's almost there. But anyway, I don't think we have a big breakout on gold. I think we still have some noise like this. I think if the indexes are still kind of choppy between the holiday highs and lows, keep an eye on it. Okay, did I have some profit finally hit on my freaking dollar CAD? Let me check those real quick. Dollar CAD. Ugh, just trying to hit 44.80. Dollar Swiss. All right, we're getting close to my take profit on dollar Swiss. This is 1, 2, 3, 4, 5, 6, 7, 8 positions long on dollar Swiss. Let's go. I'm pretty close, only about 38 points away, 38 pips away. All right. Gold. I mean, if you're long gold, that's great. I'm long gold. I don't have any futures trades on anymore. Those are all expiring, or those all expired in 2024. I'm just trading GLD for right now. I've got some credit spreads. I own some shares. GC, I'm actually better off. Well, maybe not. I'll wait on gold. I was gonna say I could probably put like a 1-1-1 trade in gold. But if this thing like turns south quickly, like I don't know. Let me take a look at it. Let me go GC for a second. So GC trade. Really? Like gold contracts, I can go out to April. It's not great. April 24. 2,500 or lower. Let's see if I get anything positioned around like 2,500. So delta wise, if I did a 25, we'll see what the price looks like. 2,500 by 95. And then as long as I can cover 40 cents here, which is pretty easy. Could I do 2,400? Okay. So that's $400, but I need to offset that with like an out of the money. So at 2,300. Move this down. Now there's just a lot of risk in the futures trade if I don't do it right. So $1.40. It's essentially a 1-1-1 trade. I can bump this up. I can probably go to like 24.50. I mean, that's not a bad income trade. So it takes $1,500 of buy power. There's a 91% chance of profit on this trade. I get $370 by April. It's just, I don't know. That risk is there. Like if gold does something really crazy to the downside, 24.50 would be right here. I would have risk in the trade. There's no way I can really. I mean, I could roll. I don't know. I'm gonna stick to silver for right now. It's tempting, but anyway, silver. So gold is performing well. Silver is also like matching. If we look at the two, I'm looking to see if one gets the upper hand. So if this chart, this is gold versus silver. If this chart goes down, that means that silver is getting the upper hand and performing better. But the nice thing is even though this is a multi-year range for gold versus silver, both assets have gone bullish. Like both assets are pretty postured for good gains to the upside. So even if this one goes down, I mean, if you're playing like allocations of both, it just means like, okay, so maybe you can get a little bit heavier on gold if we come down to the lows, or maybe get a little bit heavier on silver if we come back to the highs. That makes sense? Yeah. Why is oil roaring? I don't know. I mean, I don't know because it's not official that we're drilling, and also like inflation numbers and inflation expectations are showing higher, and we've seen the pressure on oil too. So, I mean, we could look at oil and see if there's any news. U.S. sanctions prospects, sanction fears. Okay, so that's another thing. It's like we've got tariffs and sanctions. I mean, there's a lot of geopolitical manipulation in oil, right? You've got basically OPEC versus the world. You got Saudi Arabia, you got the U.S. Supply and demand is always a thing. Inflation and energy prices, gas at the pump, all these things factor into it. I mean, look, we had I mean, how many decades have we had wars in the Middle East or conflicts in the Middle East or it's hot spots in the Middle East and oil prices are always like the ransom. So it just makes it crazy to trade. So, I mean, technically, look, it held support really nicely since 2023 and it held that support again. I've just been saying that if this level is holding, then this is not good for inflation. Higher energy prices are not good for inflation. Next week, we're going to see what the data actually shows us. Can the market see a better print in inflation, or is it just still sticky, still high? Fed can't cut. Fed stuck between a rock and a hard place type thing. We'll see next week. Okay. All right. So silver, gold, I still like. Bitcoin back up to 94. Even though the markets are down today, this is an interesting move. So markets down today, still in the red, right? They're retracing a little bit. I mean, pretty easy, right? Like Nasdaq was down over 2% or about 2%. Now it's back up to like -1, -1.1. So there's at least a bounce off support, which is what I talked about all week. Bitcoin still holding this support level. If we break that level at 91,466, then I think we pull back into like let me measure this real quick. Let me get like a symmetry measurement here just in case. I mean, this could be like surprisingly spot on as far as the technicals go. So if we go, that would be a symmetry measurement down towards around 86,900. And that gets us between the 38 and the 38 and 50% fib. So I could see this level being like a potential buy zone. I'll just call it. I'll leave that box there. But I mean, if we have a level around 87K, I'll just put a note here. Like 87K is a measured move. And if we go a little bit lower, just look at your dynamic support. The 200 moving average is around 79K. Like I'm okay taking positions there if either one of these two levels are hit over the next couple weeks. I would still be looking at buying dips on Bitcoin. Okay. MicroStrategy has chilled out a little bit. I can still get it called away for a couple of bucks. 305. This one's out to the first part of February, so I got to hang on another couple of weeks. I might, let me see here. I might roll this again. Let me see. Let me look at MicroStrategy. If it's worth it, MicroStrategy. So my 305 is in the money. My 245 is out of the money. I'm collecting like a decent amount. Let me see if I can do another roll on this. So if I roll it out another week and keep the exact same strikes, I get another 250 bucks. It's not bad. Could I roll this up? Nope. So if I roll it up, it's a debit. If I roll it down or keep the same strikes, I get a $2 credit. Let's see. Maybe. I still have 28 days in the collar. I could throw it out by another 7 days. Grab another 200 bucks. I mean, it's not bad. At this point, like it's going to be difficult to get my calls. Like if price stays where it is, on MicroStrategy, like it's going to be difficult for me to get this to not get called away, but that's okay. So what I'm looking at is if it's going to get called away with a fairly high probability, I might as well give myself another week. And if I can add another $200 a week, I mean, if I rolled out another month, I get another $800. And I think I have this in like 4 accounts. So if I get 4 accounts, another $800 of profit on top of the $1,700 that are currently sitting there. So that gives me basically $2,500 per account. That's another 10K total position. And I just have to kind of massage it like week to week. So could I get filled on a roll for like $3? I mean, maybe. What's the big monthly expiration for February? February 21st is going to be the monthly. We have earnings also on this one. Oh, interesting. Yeah, I think I do want to roll this. Let me see what it looks like if I roll it out to the 21st. So I roll it to the 21st. I get an extra 3, 6. I think I'm going to do this because that way I've got a put that at least at $11.05 on that put, I can track that debit, and through earnings, if we have like a terrible earnings and MicroStrategy, if I can get this put to, you know, increase, I mean, I don't really want it to, but if it increases in value, I can still lower my cost basis. Let me see if I can get $4 for this roll. $4 for the roll. Go out to the 21st. Not filling there. Let me try 375. Okay, let's try the mid price at 365. Got filled for 366. All right, what else has MicroStrategy? This account has MicroStrategy. There. Let me take my collar trade. Let me do a quick roll on this. Roll this out 2 weeks. Keep the strike prices the same. What the fudge? I just got filled for 366 and the mid price is now 5 and change. Like, what on earth? Well, that's annoying. Well, I can do this here. Oh, the 20, I can roll back a week. Back a week. There we go. 390. Okay. This is more like it. Let's go 390. 380. Mid price is $4, man. 375. It's probably going to be around the same price I got filled on the last time, 366 or so. 370. Son of a gun, 365. This is the fun part about like some of the bid ask being a little bit wider. All right, 365. There. Okay, right here. Here we go. Last one. 103. So there's my 305 and 245. Do a quick roll. Go out to the 21st. 3.65. 365. Okay, so now do a quick roll on MicroStrategy. Tracking this bad boy. So I own it at 288.47. Where did it go? Okay. So just some old school manual tracking. So update, new collar with a roll. The 221 expiration, 305 by 245. The 245 put is trading at around 1120. Put, I got filled for a put at 1093. Okay, that's good. And on this account, uh, 365. So now I have a 345, 245. Cost price, yeah, about 1090 on that put. So 1090 to $11. Debit. Pulled in 365 credit. So now my net break even is 288.47 minus the 365. I own MicroStrategy at 284.82. 284.82. So if it gets called away at 305, I make $20.18 per contract. I make $2,000 on those accounts. There's $6,000. Okay. So out a few more weeks. No big deal. I'll keep an eye on it. Okay, not bad, not bad. What else? Coinbase. Anything I like here? This trade should be closing out next week. This is a 111 income trade. It should be looking pretty good for full profit. So coin right in here. Or it was. Did I close it out already? see. What happened to my Coinbase trades? I must have closed it out for profit. I think I must have. Let me do a quick history check. Or it could have already expired, but I'll find out. Coin last, let's say 30 days. So on the 3rd. Okay, so I closed it out for profit on the 3rd. Got it. All right, so that one's closed out. Do I like this enough to do it again? Let's check the IV on Coinbase. This might be a new trade for us today. I'm good with that. So IV at 34.8, not super high. We do have earnings on the 20th. Would there be a spot that I'd be interested in owning some Coinbase? Well, probably in the one, like this 111 trade was back down near these lows. I would think, I mean, this is going to be a riskier trade for sure. A 111's not bad. I'd be willing to take on some shares because the premiums are pretty darn good. But if I'm going to take on any shares, I could look at a ratio or 111 around the 150, let's say 155 or 150 zone. That would be a pretty healthy correction from the all-time highs. 147. I mean, actually, it's not all-time highs technically. So I guess the question is this going to continue to work up? Are we making, higher highs and higher lows? Is this going to be like a nasty correction? Is this going to be crazy volatile? Is this going to give back a bunch of gains? I mean, this is another stock that I would be confident that if I take on any assignment, which I would intend not to, but if I took on any assignment, I could repair it. I'm pretty confident I could repair it. So anything in like the 150 zone would actually look pretty good. So if I wanted to say, okay, through earnings, 42 days out, we've got earnings on the 20th. We got a 21st expiration. I could go here right at earnings. I could do a ratio spread, the 155 by 150, 86 cents. I don't love that at all. Let's move this up one strike. $1.62, and I could own the shares around 150, which isn't a bad spot. So if I own the shares at 150, that would be right back to these September lows of last year. It's not a bad spot. Not a bad spot. So income-wise, that's only out 42 days. I would take this trade. I'm willing to own the shares of Coinbase, and the reason why is if I went out 30 days, 35 days on an at-the-money covered call, you're going to get like $20 to $25 on a covered call. So even if I took the shares, I could lower the cost base very quickly over like a 30 to 60 window, probably lower the cost base by like 40 or 50 bucks. So it's not that I'm worried about repairing the stock. Obviously, if I own shares, I'd have it protected. I would put a collar trade on it. But I'm going to look at this trade through the 21st. The 160 by 155, I get $1.62. Just an income. There's a 93% chance of profit on that trade. It's only going to tie up about $1,800 in buying power. Could I go 165 by 160, get a little bit more bold? There's 200 bucks, but now it's a 92% chance profit, ties up a little bit more capital. Let me try this. What is a, let me delete this. Let's go 160 by 155 by 150. So now my assignment price would be 150, take off the 5. I'd own it at like 144 and change. I only get $100 of income with a 97% chance of profit. I mean, I like the probability, takes up less buying power, but it's only 100 bucks of income. If I delete this leg, double up on the 155, I get $1.35. Probability goes from 97 to 96. I mean, it's extra 30 bucks. Choices. But break even wise, the break even, this is probably the most important thing. If I took the assignment, if I buy that, sell that, my break even would be, and I think I'm going to do this. I'm going to go 2 contracts so I can make $212. And if I own the shares, I'm going to try to repair it for, instead of making, typically I like to repair for like $1,000, and I do like these quick flips of like $1,000 profit. I'm just going to try to flip it for $2,000 if possible. So I think I'll do this. Buy power is pretty cheap. $212 is income with a 97% chance of profit. These deltas are crazy low. This is like a really, really, I mean, the chance of assignment's like 2 to 3%. So just on income alone, I think I'm okay with the trade. All right, I'm gonna take this trade. So this will be a new one for Coinbase. Where are we at here? Coinbase, new trade. I'm going to buy the 160 put, sell the 155, and sell the 150. I'm going to do it for 2 contracts each. If I just put this in, this typical trade would be a 1-1-1, right? So you buy the 160, 1 contract, you sell the 155, you sell the 150. I'm doing this trade with the potential of owning it. All right. So there's a 3% chance of assignment. So it's going to start out as just an income trade to make $106. But for me doing 2 contracts, I make $212. That's fine. I do that in the next 42 days. We do have earnings. Okay, so right through this, I'm going to have to hold this through earnings, and that's okay, because if earnings does come down to give me an assignment price, I'm going to quickly repair it. But I'm going to do this for 2 contracts. So for this, see if I can get at the mid price at $1.06. That's pending. So $1.06 not filling. Hopefully it stays over $1, $1.05. My gosh. Give me at least $1, would you? $1.04, $1.03. The bid ask is pretty wide. If it's less than $1, I'm not going to take this trade. All right, well, cancel that because it's not filling me. Even at $1, I'm not getting filled. All right, let me try that trade again. Let me go. That's the monthly expiration. That should be like the most liquid. Son of a gun. Maybe I have to go up. So I buy the 165, sell the 160, sell the 160 or the 155. It's the same trade. I just moved the strikes up. Now the bid mid ask is still pretty wide. Let me see if I can get this one. Now the ownership, if I got assigned, it'd be 155, 155 minus 5 minus the $1.07, 148.93 be ownership price. I'm comfortable with that. 2 contracts, $1.07. All right, let me finesse this down to $1. See if I can go penny by penny. Come on, Coinbase. Give me some liquidity. There's open interest there. Like there should be fills. All right, just got filled for $1.03. Okay, so got that account in. Filled. And filled. Okay, so new account, new trade. This is a 2/21 expiration. It's I guess technically it's a 2/22 trade. So I'm buying the 165 put, selling the 160 put, and selling the 155 put. Pulled in $1.03 credit. I'm doing that on everything's 2 contracts. So I get $206 on credit. I have a 96% chance of profit. So I'm just getting this all typed up in my spreadsheet, and I'll post it in the Pulver Alert section for trading A1 Trading Discord. 96% probability of profit, about a 4% chance of assignment. $206 on credit, willing to own, and the break even if I own it would be like 148 something. So 155 is the assignment price, minus 5 on the bear put spread, and then minus the 103 that was filled. So 148.97. Okay. So that trade is in. So I can move this down here. Actually, I'm just going to delete this. Let me go to the box. So 165 by 150 in this area there. So that trade, I took profit. I must have taken profit on that one. Yeah, I think this was 395 trading down for like less than 30 or 40 cents. All right, so new trade. This is a 221 expiration. Buy the 165 put, sell the 160 put, sell the 155 put, $3 credit. Willing to own 148.97, break even. There. Now I got a screenshot. I'll post that in the chat. Okay. So some action on Coinbase. Cool. I closed out EETH for profit. The 60, it was the 60 by 40. I closed out for profit. I still have a 45 by 35. I'm just going to let that one expire for next Friday. Copper got a big old rip today. That's interesting. Nice. Is China getting a big jump? HSI? Bueller? Anybody? Nikkei? Little red? FXY? Should I have been trading Japanese yen futures? I missed my window. Not really. I'll keep an eye on it. DAX, FTSE, Argentina. Give me a pullback, Argentina. Nope. China's down. Back to the 200 moving average. Brazil, maybe coming back into COVID levels. Mag 7 down. Jeez, oh Pete's. This is why I put collar trades on everything, just in case. Meta, like to see a bigger correction there. Microsoft working its way down. I've got a bunch of these trades on a Microsoft. This is the trade we added in this week, the 380 by 375. I'm good with all these. I think I'm good on Microsoft. If this comes down, I actually might just buy shares. If it comes down to like $400, I might just throw like a $1,000 or $2,000 position at it and just dollar cost average. I mean, this is stock I wouldn't mind holding if it's like range bound, fine. So anyway, or just play the incomes here, like month to month. Netflix, this is a nice drop on Netflix. This is why I've been waiting patiently, because I was like, look, we're way overstretched. We got so far away from the 200 moving average. We got a crazy high bar count. I think we're going to pull back and try to find some, like 100, 144, 200 EMA support. NVIDIA still hanging out at 135. Not a surprise that we had like a poke and fake out at the highs. I still think this needs to pull back and find like the 144 to 200 moving average. Tesla, 390. I still haven't been filled at my dollar cost average levels. I do have some income trades ratio spread down here. 360, 250, and 285. Those are just $1,000 positions, like $1,100 and $1,500. Berkshire. Oof. Berkshire getting the burn today. 442, I've got a ratio spread, 415 by 410. If I owned some shares of Berkshire, that would be the 410 assignment. I'd own it at what? It'd be like $400. I would own Berkshire at like an 18.25% discount. I mean, I look at that as kind of similar to saying, would I own the S&P like 18% lower? I would. So Berkshire to me is that trade. Now it may not be a sign that's still like very low probability of assignment, but you never know. Bond wise, short-term bonds down today. We're at fresh lows on the 7 to 10 year, and we are at fresh lows, even though it's a green candle. We're at fresh lows again on the 20 year. The 10 year continues to push higher. This is the chart you have to watch. This is more pain ahead. If we're above 5%, get out of there. Don't change that. If we're above 5%, I think something breaks. So keep an eye on the frog in the pot. The 10 and the 2 year disinversion continuing harder. The 10 and the 3 month disinversion continuing harder. Mortgage rates climbing up by 2 bips. Let's see here. Junk bonds. This is just measuring credit spreads and liquidity in the market. It is not quite as ugly as what it was during FOMC, but I'm going to keep an eye on this one. Let's have a look. China stocks. China stocks keep dropping. Alibaba down to some fresh lows. Baidu down to some fresh lows. Son of a beaver. Baidu, you piece of crap. I just have some shares in Alibaba and Baidu. Collars on each one. JD, I'm repairing this one as well. But I might just end up looking to do a roll. I'll take a look at these. Are we down on SCHD? About the same. Let me go to the how many stocks are above the 50-day. About 25% of the S&P stocks are above. I'm looking to see if this gets down to like 11 or lower for a buy opportunity. And then the NASDAQ, same thing. If this gets down to like 10 or 11, showing only about 10% of stocks are above the 50-day, I'm going to look for a buy opportunity. This has been a pretty good timing indicator for as long as I can look back, like, go back freaking 30 years. Costco, um, maybe some dollar cost averaging on Costco, nothing right now. Walmart, I bought some shares. Walmart's actually up. I think Walmart's a good one for some consumer defensive. Even though it's had like a crazy bull market, like Walmart should not have gone up 100 and some percent like it did last year, but it did. And I just wonder if we're going to consolidate on Walmart or if we still end up pulling back. I mean, there is a decent bar count where maybe we just go sideways. But last time we tested the 200 moving average was about 260, 256 bars. But anyway, it's part of the portfolio. I just put in a collar trade. I bought the shares. Break even is $90.88. So I'm up a few bucks on Walmart right now. Nike, sitting back down towards the lows. I have some puts in on Nike. I think they're in the 60s. Nike is right here. Yeah, $65 and $60 cash secured puts. That's fine. I'll own some Nike if that's assigned. Otherwise, it's just some income. Home Depot. If the home buyer is getting broken, if home projects are pausing, or I don't know. The trades I took on MasterCard and Visa worked out really nicely. Those were bear put spreads. Johnson & Johnson, I did a roll. I rolled it all the way down to 135 and 130 and kept the income there. Progressive heading lower. I have a trade on Progressive. I didn't put it on my chart. PGR. I have a 230 by 225. Okay, so I have a 230. This is a 221 expiration. 230 by 225 ratio spread. And that would be 217.35 break even if assigned. Chubb, that's insurance. Oh, baby. This is one of Berkshire's darlings. I wonder if this is why Berkshire's down with the position they took in Chubb. Like, what the hell happened here? That's a big drop. Maintain and outperform. Insurers fall. Oh, there you go. Your LA fires. Wow. I wonder if this is dragging Berkshire down. Now, the good thing is, like, I talked about wanting to own this thing at like 232. I don't have the option chain that I would like to see on CB though. So the IV is really high, which is great, but the option chain is a little sparse. I don't have a lot of filled expirations. So I could go out to, February or May if I was willing to own some Chubb. 230 would not be bad. What would be this discount? If I could own this at 23% off, that's not too bad, obviously. How ugly does this get? I mean, nobody knows, right? There's always risk. So, I mean, could this thing just be like, it's been a bull market since 2020? How resilient is CB? Let me take a look fundamentally before I just start throwing trades at it. I mean, fundamentally, it looks pretty darn good. Probably high. I mean, it's not super high in the price to earnings, price to sales. That's good. Okay. I mean, just at a glance, like, it does look pretty solid. Now, would I be interested in like a 230 to 220 ownership price? I think I would be okay with that. Premiums are a little bit better here. If I did like a 225 by 220, that's on the low end, the expected move. Let me put a ratio spread here. So there's an 88% chance of profit, about a 15 to 16% chance of assignment. Income wise, I get 260 bucks. This is out 126 days. This also goes through earnings, which is in January. Or I could just do a credit spread. Let me see. If I do a credit spread and I want to get an at the money, I'd rather play a ratio spread. I'd rather take my chances on the income first. So if I go out to May, 225 by 220, that assignment would be, so I get 260 in income. That's a pretty good trade. So 220 is the assignment, -5, minus 2.60. I'd own CB at 212.40. 212.40 off the recent highs. would be about a 30% discount. I like that trade. Probability of profit, 88%. There's still about, like I said, a 14 to 15% chance of assignment. It is a good income trade. I think it's good for ratio. Let me see if I can get a 225 by 20 by 15. So now it's a 91% chance of profit, a little bit less income. Ownership price would be cheaper, I think. 215 minus 5 minus $1.90, 208 break even. Chance of assignment now is about 12 to 13%. For an at the money, I mean, I don't love the option chain. I'd like to see this filled in a little bit more. But for 40 days out, it's an okay premium. It's not great. I get like $8 to $10 for an at the money. So it's doable, but this would have to be like, if I was assigned, I'd have to collar this thing and be pretty patient. But this should be a fairly resilient stock. So do I like this trade for the 111 or do I like it for the ratio spread? There's income on the ratio spread. Buy power on the 111 is pretty cheap. All right, I can get over two. I'm going to do this over. If I get $2 for it, I'm going to take the trade. 205. I'm trying to get filled for at least $2. $205 not filling. All right, let's try to penny this thing down to $2. If I don't get filled for $2, I'm not going to take the trade. 201 got filled. All right, next account. 201 getting filled. All right, so I got filled at 201. All right, new trade. CB. So 111 trade. I'm doing a 5/16 expiration. Buy the 225 put. Sell the 220 put. Sell the 215 put. Collected 2.01 credit. 91% chance of profit. And willing to own. And the break-even price on ownership would be 208, I think. 215 assignment minus 5 minus 2.01 would be 207.99. Okay, so it's income first, assignment second, repair third. I would be comfortable assigning, or I'd be comfortable, like, if I got assigned, having the cash to get assigned and take on the trade. All right, so I'll add in coin and CB for new trades today in the Pulver alerts. I'll add that into the Discord channel. Let me add this in here. So a 220, 225. So 225 by 215. There. So this is a May expiration. 225 buy put. 220 sell put. 215 sell put. 201 credit. Willing to own. And the break even would be 207.99. All right. So there's my trade. Take a screenshot. All right. Not too shabby. What else? Palantir, 65 and change. This thing's dropping like a rock. I've got a ratio spread on Palantir. I'd love to scoop up some Palantir here. This is out to April. Let me see here. I'm only doing one ratio spread. Let me see if Palantir is getting better on the IV. So I went out to April, and I've got the 49 by 48. That's a ratio spread. If I go out to May, now they're $5 wide, but I could do like the 50 by 45. 55 by 50. That's not bad. What I collect on this one, $1.41. $1.41 credit. If I was getting assigned on this, it'd be $50 minus 5. Probability assignment, it's a little bit higher. This is like a potentially 20% chance of assignment, which I don't mind. But this is coming back to like fair market value, right? Like everyone's thinking like Palantir was like the best freaking stock last year. It was nuts. Still, it's just, I know it's really expensive on price to sales, but man, that's insane actually. That's the one thing that makes me a little worried is like fair market value, but I would be owning it pretty much at fair market value, which isn't bad. I just don't know. It's like, why isn't it valued for more profit based on a discounted cash flow model? I don't know. Is this a stock that I should be trading? I don't think it's awful. Yeah, I'm gonna take this trade. So a 55 by 50, another ratio spread in Palantir. I'll throw this in and then I'll wrap it up. I'm grinding all morning. So everyone good? I know I haven't done like requests and I haven't gone through my top down, but you know, when you catch me in sessions like this, it's like I'm trading. So if you like it, you can trade with me. If you don't, keep asking questions. I'll get to the chat. All right, so I'm going to do a 55 by 50 out to May. It's a nice little income trade, hopefully for like $1.90 gets filled. So let me see if I go down a strike. So if I do the 50 by 45, I'm still grabbing some income, but less. If I did this as a ratio spread, what? I get $1.87. Okay, this is actually a better trade. This is crazy. If I do a 45 by 44, I get $1.87, $1.88 of income with about a 13% chance of assignment. I'm going to take this trade instead. So rather than, I mean, this was okay for income, but this one is a lot tighter. So I can still get a decent income trade, good probability of profit. I'd like this to be a little bit higher, but it's about right. I mean, it should be, realistically, this should be like a 86 to 87% chance of profit based on these deltas. This says 82, but whatever. I still like to trade. If I get filled for like $1.85, $1.80 is fine. I'm going to take this trade. So this is a 45 by 44 ratio spread. It's a put ratio spread. So I'm buying the 45 for one contract, selling the 44 for two contracts, willing to take on the assignment. Okay. All right. So let me see what I get filled on for this one. Palantir looks pretty good. Buying power wise, I can get this for most of my clients. I think everyone's got some cash in here to take some Palantir with me. All right. Cool. I like this trade. Palantir. All right, this one's going to go in everyone's account. First, let me find out where I get filled. $1.85. Easy peasy. All right, $1.85 got filled. Now, everybody gets in on the action. $1.85. Okay, right there. Okay, last account. Good. All right, Palantir. May 16. Buy the 45 put. Sell the 44 put. So it's ratio spread. I got filled for $1.86 credit. About a 13% chance of assignment. Got an 80% pop on this one for probability of profit. If I own it, willing to own, break-even price on that chunk of shares would be 44 minus $1 minus $1.86. I'd own the shares at 41.14. Okay. So 5/16 expiration, 5:45, sell 44, $1.86 credit. All right, screenshot updated, and I'll get all those posted in the A1 Trading Discord for Pulver alerts. Okay, before I go, take a look at currency strength. Big jump in the Japanese yen, big jump in the dollar. There's your non-farm payroll reaction. I'm getting closer and closer on that Swiss to hit and profit. That'll be nice at 9,200. Hopefully that hits in the next little bit. We have dollar index on the day is still pushing higher to fresh highs in the dollar index. I'm telling you, don't fight this thing. If I wouldn't, I mean, look, if the dollar keeps going higher, I think the US 10-year also goes up. It's not a good thing. Like dollar getting stronger is not a good thing. US 10-year going up, not a good thing. But that seems to be the trend that is not stopping. So I'm not going to sit around and beg for it to go down. It's like I'd love the 10-year to go down. As a soon to be homeowner out here in Utah, it's like, yeah, I don't want to buy it freaking 7% or higher. So I'd like to see something happen where like Q1 there's a little bit of a reality check. Where do we get on the overall indexes? I mean, we're not that far away from all-time highs. Even with today's little sell-off, we're not that far away from all-time highs. Here's SPX on the day. Do we test the low of the day and just bounce back off it? Do we go slightly lower for the day and bounce back off it? We'll find out. This support level is still really important to watch for next week's trading. We have all the inflation data coming out next week. So is this a break? A break and then a snapback in it? Or is this like a break where this market's going to continue to flush lower? We're about to find out. But it's already been a pretty big move, right? So, I mean, down 1.7. Qs are back up towards 2%. So as we've been talking in this session right here this morning, we're pretty much right where we started. NASDAQ back down towards the intraday lows, nearing almost 2%. So from the close yesterday to the low today, it was around 2.19. Does it bounce off that level and just be like, an ugly day and non-farm and inflation expectations are a little bit higher from the University of Michigan, that we have actual inflation numbers coming out next week? Let's see what it does. But I've got like I said, my market maker levels on SPX. I'm still watching to see, will they be defended around this 5,800 handle? So if we do come in and like tap the lows, does it like pop back up again? So is it, down in the day, up, down in the day, up, and then next week is, maybe a buying opportunity? I don't know. It's tough to say this is a buying opportunity unless you're looking out a little bit longer. Like horizon wise, I don't think we're looking great in the next few weeks. I think we're still expected to see some corrections. If this market is falling into some key technical levels, which through the holidays it's been holding, but if we break this level here, then there's really not much stopping this thing until we get to the 144, the 200 moving average. My big opportunity would be like, if I could just buy this thing at technical support around 540, I'd say 550 to 540. That's like a no-brainer discount. So keep an eye on it. All right. But dollar's up today, gold's up today, oil has made a big jump today. I mean, oil's up 2%. It's fading a little bit. That's actually, yeah, I mean, it's fading a reasonable amount. So oil continues to be like, I think it's going to go higher. It looks like it wants to go higher, but it's quite volatile. Gold doing its thing. I don't know if we're hitting any all-time highs anytime soon. Bitcoin 93. I still have a measure move to 87.79 zone. I'm looking for some buying opportunities if we have a bit of a correction. And did a roll on MicroStrategy. I'm hanging on tight to NVIDIA right now. Everything I own has collars on it, so I'm protected to the downside. But I'll just keep an eye on those levels. And that's it. So I'll let you go for today. I'll get those trades posted. New trade in coin, new trade in CB, new trade in Palantir. And then I'll update MicroStrategy if you're in that trade with me as well, with the ownership price on the roll. And we'll keep tabs on those break evens. Okay. All right. Thanks, everybody. Hey, have a good Friday. And have a good weekend. All right. See you. Bye.
Thanks for watching today's A1 Trading Show. We hope you enjoyed, and we're excited for a brand new year of trading with you. If you're new, consider subscribing for daily videos and live streams all year long. Be sure to check out the description below for our latest deals and offers. 2025 is just the beginning of our best year yet. We'll see you tomorrow.